Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We've got a jam-packed studio and tons of information. I'm Harvey Freed. He's Harry Glantz.
Full house today. Got everybody in here. Got a great guest, and we're going to introduce her in a second. Harvey, 1 week from today, I believe, or this week, spring. Spring has sprung. And look at yesterday. Look at yesterday outside, March 14th. It's 70 degrees out. Who would have thunk it, as they said? You know, home buying season's going great. We're rolling. People are out there buying houses. We've got a great guest in who we'll introduce. But listen, people, we talk about every week. I got Becky here sitting beside me with Lisa and Harvey and our special guest. You can't wait. You guys, we cannot wait.
And
So,
speaking
Harvey,
of
with
not
that,
waiting,
go.
I couldn't
Can't
wait to walk out of my house without a coat on
Right,
because it
you
feels
can't
good
wait.
out there this morning.
finally.
So
Let's
Phenomenal.
talk about the hat, though. What's with the hat thing?
listen,
I
It's
wore one
raining this morning, too.
yes,
raining.
it's raining. Like no one wants to do their
Got your
wig.
hair
Yeah,
done.
it's
I
all
gotcha.
good, yeah.
Are you supposed to say to a woman, what's with the hat thing?
No, you're not.
Oh, yeah, I didn't think so.
I
Thank
mean,
you.
you're talking to me.
Thank
I
you,
think
Lisa.
everybody
What's with the
knows
hat
that
thing?
knows me. I have some kind of hat on at some
Yes.
point in time.
Becky
Anybody?
probably
All
has
right,
one of the biggest hat collections of anybody I know.
Yes.
Let me do the room real quick. Becky Ellie, of course, she's got the hat, and we'll talk all about that. Lisa Lawson, you brought in a great guest, too, this morning. You want to
Yes.
introduce Amy?
Amy. So Amy is from Realty Executive Hometown in Shelby Township. Amy Cairns is a rock star, literally a rock star. So she
Yeah.
had 4 closings, another one on Monday, a couple listings this week. I mean, this girl is busy. So when you keep hearing that, oh, there's no business out there
No.
or real estate is slow, Amy and I can attest that is not the case.
Yeah, things are going great out there. Just gotta be ready to help
Yes.
people, and that's really the key to it. Great to be here. Thank you.
We'll talk about last weekend. You guys did the bridal show down at Ford Field. It's an annual event. Pretty cool because, again, there's a lot of vendors there. And probably the coolest thing about getting married is settling down and getting your own home. And you guys brought the Home Funded program. We'll talk all about that this morning, too.
Yeah, so Home Funded is awesome. Becky and I used to always say we're getting houses for spouses. And the Home Funded program makes it a million times easier. Everyone usually says the largest issue in getting a home, especially after paying for a wedding, is down payment. They're like, well, we got to pay for the wedding first. How many times do we hear that? And so we kind of came up with a solution where we can crowdfund and get grant money towards your down payment. So that is what Amy and I talked about for 4 hours, right?
Yeah,
on
we met a lot
Sunday.
of great people.
We met a ton of great people. I mean, it really made some really great connections, and people have already started their account. So once you start a Home Funded account, the minute you do a social share, they give you an additional $400. If you do an additional social share, so you could do one towards Facebook, LinkedIn, and Instagram. After that, you can do a share of something called Up It. And Up It is 1,800 retailers that you go through their portal, and they're big retailers like Home Depot, like Target. And if you buy something through that portal, you get an additional $400 towards the house. I mean, it just literally adds up. In fact, her son did it, and within a couple months, I mean, do you want to tell them how much?
Yeah, he's got $1,500 in
In a
there
couple
right
months.
off the bat. We couldn't believe how fast it added
Yeah.
up. It's really
I
exciting.
mean,
What's cool about it though is it's just like the same with your credit card points, right?
Correct.
You know, like if you're going to get more points if you buy gas at this certain gas station, and where
You're already shopping.
You know, with this program, we are trying to get you this money. You know, you want to
Yep.
be married to your house or you're not your spouse, and you know where it's like mindless things. Like I'm going to shop at Walmart today or Home Depot online. Guess what? If I associate that account with my friend that's getting married, I'm automatically going to contribute $400 to their Home Funded account. That's going to get them one step closer. And now I'm not being like, hey, what's up with that toaster? Now I'm like, hey, what's up with that house? How are we going to get you there?
So, ladies, let's let everybody know this, okay? So, on people register; they still register for weddings, right?
Yep.
Now, you can go ahead, and I've seen people register and say contribute to our honeymoon, right?
Yep.
Which
Yeah.
it's a thing. It's
Yes,
a real
it
thing.
is a real thing.
It wasn't a thing back in the day, but it's a thing now. You can
Such a thing
register,
now.
and people can contribute instead of giving gift for a honeymoon. Now they can really register for a Home Funded to go ahead and fund a home purchase out there.
Correct.
So things have changed in the lending world where you can go ahead and you can accumulate money from your guests, put it in an account, and it gets matched, by the way.
Correct.
And
Two to one. It's more than a match.
Yeah.
You give $100. The Home Funded account will give an additional $200. You now have $300 total. It is a 2-to-1 match.
So the savings
No-brainer.
account goes toward a down payment, which is totally legitimate in the lending world, and not many people are doing it.
We're the only ones.
Yeah,
Exclusive.
CMG exclusive.
people have to understand there are different ways of going about and accumulating down payment money.
Yeah, we are. What's cool about Capital Mortgage Funding and what we're able to do is we are the Baskin Robbins of lending. We are not just vanilla. We are 31 flavors, and we're going to figure out the flavor that's going to get you to the closing table as quickly as possible, because everyone's situation is different. So we're here to identify that unique, vehicle that's going to get you there, because what's going to get me to the closing table is not going to be the same thing that's going to get Lisa to the table, because our wants, our needs, and what our financial profiles are completely different. And it's very important that you're in alignment with the right professionals that are going to get you where you got to go, and they're not just looking so closed-minded, because it's not going to work sometimes.
Oh, and I love me some mint chocolate chip too. I really do.
I'll go a little
Even
back.
Amy and I,
really
Amy and I,
do.
we were working the booth. How many people came up with different ideas? And so many people are sitting there and they're like, well, I have a different question, or I'm renting, or I live with my mom, or we already have a house, but we need to get a bigger house, or we have got two fiancés. One owned a home for 4 years. The other one is still living. Everybody's scenario is different. And some people are like, well, I'm not ready. I have to work on my credit. We'll help you with that too. We are literally here for the sole purpose of getting you ready to get into your forever home.
We are brought to you by CMG Home Loans. Let me go doing all our good stuff here. Powered by Capital Mortgage Funding. Also powered by CMG Home Loans, NMLS 1820 Equal Housing Lender. This is an exclusive program. We dove right into it, guys. An exclusive program that helps with the down payment. Again, like we said, the number one hurdle that we're running against is the young families. You could definitely, Amy, you could definitely attend to this. The young people don't have the funds to buy the house. They have the great job they just got. They're adding two incomes together, but they just had maybe this big wedding or some honeymoon or something like that.
Or paying rent. They pay rent all the time and they can't save.
Sort of like GoFunded. Let's just go there and clean up the program a little bit. Home funded, just like a GoFunded type of page, except for we give this 2-to-1 match. Right? 2-to-1 match on money. Up to how much, though? It's up to...
So they match the money up to $2,000. Mm-hmm. So once we have $2,000, we're not going to continue to match. But other people can still donate. So they'll put QR codes on the back of a save the date. Right. And people can scan that QR code and make a donation. It's, it doesn't just have to be for the wedding. It can be for the bachelorette party or, the wedding shower. Mm-hmm. You can be donating. And often if you ever go online and look at their home funded page, there's a generic one that you can see all the information. Right. They talk about if everybody just gave $50 and there's 100 people at a wedding, you got $5,000. We matched the $2,000. Now you have $7,000. Mm-hmm. It cost you nothing. You weren't saving. It's not your money. People are going to give you the gifts anyway, And I mean, it's a great program to really kind of kickstart people's married life together.
And it goes with the theme of it's not when you're going to buy a house, it's how. Mm-hmm. How are we going to get there? And it's people want home ownership, as you see, Amy. They're out there looking at these houses, but it's that commonality. Affordability has been a plaguing issue. We've been a 365 state, and it's not if or when they want to buy now, it's how are we going to get there? And it's very important that we have creative solutions to get some people there, because the 9 out of 10 times, you're going to hear us over and over. If you roll back the receipts on our Hardcore Mortgage Show that's been on air for 25 years, right? We're in our 25th season. Show me the money. And no one is showing up to a closing table with a suitcase of cash anymore. No duffel bags. They're not in.
They wouldn't be able to close if they did.
Amy, the issue is the inventory, right? Inventory still. Talk about the inventory right now.
Well, the inventory is limited right now. So it's really important when we start talking to buyers to try to really identify what they're looking for, get a good pre-approval so we can look in their price range, first of all, so that we can get the offer that's going to be accepted for them. Get the terms that the seller needs. Yeah,
inventory is so limited right now that you have to set up your team where you're going to win that offer.
Yes.
And we talk about that. We've got obviously a new ad coming out that said, listen, it's only about the team that you set up and the home inventory, because you might have to make 6, 8, 10, 12 offers on homes that you see, because people are coming out in droves. Now with the weather breaking, there's going to be more competition out there, and the inventory is not going to go ahead and align with how many buyers are going to be out there. People are going to have 5, 6, 7, 10 buyers in their top left-hand drawer that they could, if they found them a house, they could put them in right away. So that's what we're going to see, Amy. And you're in for a heck of a spring.
There's also 2 months supply right now. Is that kind of
right? That's what they're saying.
Yeah. Roundabout there. Yeah. So in a balanced market, right? It's 6 months, right? That's so it's technically. So when you hear us say there's less than a 2 month supply, that means that it's still trickling on the seller side. Now, that doesn't mean that the sellers are going to be getting this phantom in the sky, number. They also have to be realistic with someone like you, Amy, when you're going out there, because the price dictates the market. You can tell when someone is trying to overshoot the price because it's sitting a little bit longer. Correct?
Right. Absolutely. It's the ones that are priced well. We're seeing the pricing edge up. We're seeing multiple offers, but We always do a CMA for our customers, so they can see what the market's doing. So
Yeah. So, like sellers, what we're saying is if you are with a licensed, professional, full time real estate agent, this is what they do. Like Amy in the studio, she is boots on the ground. You heard, Lisa, right off the rip. She's out here writing the offers, doing the things. There's a reason why she's going to say your house should be priced at 350, for example, versus the 500,000 that you think in your mind because your neighbor 5 years ago sold it for 500,000. Because when it's priced right, you're going to get more offers and possibly get a higher offer.
She does this all the time. Like we just had somebody who called and he had a family member pass and they were listing the house and Amy's like, we're listing it for this. And the guy calls me all excited because we were crunching numbers to see how to use that cash to buy a new house. And he's like, oh, it sold for more than asking. And I was like, of course it did, because Amy knows how to get people to look at the house, to move it. If you list it high, what people look at it and they're like, it's a little high, and you get no offers. It's much easier to list it competitively than list it too high and have to drop your price 10 or 15,000 because you shot for the stars. You know what I mean? And really, it doesn't mean that it wouldn't have gotten there on its own, but you can't start there. You still have to price it competitively. So I hate to say the bidding war, but so people can bid it to what they want. So you can get competitive.
Yeah, it's like Price is Right.
offers.
If I want to pay $5 and you're paying $2, well, guess what? I'm going to win.
Well, that's going to happen.
But there's a difference between price and value.
Yeah, it's going to happen in the market. If houses are nice and they're shown well and they're in great condition, there's a limited supply, you're going to have multiple offers and it's going to go over list. Let's face it, we know that. So what we have to tell people, we have to say, if you want the house, then buy the house. It's up to you. So if you really want it, take advantage of it, but don't wait. You can't wait because prices are going up and there's a limited amount of inventory on the market, Harvey.
All right, we're going to take all your calls this morning at 248-539-9797. Amy Cairns joins us from the great office way out there on the east side, Realty Executives, hometown. And, of course, we got lots to share with you. We want to hear from you, 248-539-9797. We'll be right back. Alrighty, welcome back to the show, 8:16, and there's a little drizzle out there, but always a nice weekend here in Southeast Michigan. If you want to join the show, 248-539-9797. It's the Hardcore Mortgage Real Estate Business Show in our 25th year. Becky Ellie's way over there, Harry Glanz, Lisa Lawson.
Way
I'm Harvey
over here.
Freeman.
Way over there. Wow. Talk about the volatility of the market, Harvey. Stock market had a little bit of a crazy week, but it came back nicely yesterday a little bit, about 41,488, something like that. People are concerned about it. The economy is a hot topic. Markets go up and down. They readjust. And, look, if you like NVIDIA at 140, it went down to 107. It's back up in the 120s now. Why wouldn't you buy it? I think it was just an opportunity for people to take advantage of buying. If you like something at the high and it goes down, why wouldn't you buy it? It's kind of like a house, Harvey. Things happen. If you like the house, you got to buy it because you can't wait. I was going to wait to buy stock. Why am I waiting for? Either buy it or don't buy it. The economy is going strong. Inflation is it's coming around. We know, Becky, Allie, and Lisa, what drives rates in our market. Everybody thinks it's a combination of things. It's one thing, it's inflation. It's the price of goods and services and what people are willing to pay for them that the Federal Reserve will say, listen, if we have to spur on the economy, we're going to lower rates. The economy is going fine. The Federal Reserve came out this week and said, we are doing nothing. There's no reason to go ahead and lower rates. People have adjusted to mortgage rates being in the high sixes, low sevens, and you're seeing that because people are buying houses.
Yeah, and the real truth is that if you're renting, your rent, there's no
100%.
There's no mandate on that. They can increase it as much as you want. Whereas, at least if you're owning your own real estate, the market, when the rates move, you can slide down with those rates. And the truth is that it's very easy for us to engineer a payment based around what you're comfortable with and what you can afford. And we're very much we'd rather you live under your means than even at your means because life happens. Obviously, we've been in this weird place in America for the last 5 years as far as COVID and then coming out of COVID and then, the egg brigade and all these things,
the
right?
whole egg thing.
And you have to make sure that you can afford not only your home, but your car insurance. These are the things that no one really talks about. There's such a, a huge focal point on interest rates on mortgages and all that jazz, but car insurance is super high right now. Homeowners insurance is super high. Yeah. Groceries are super high. And all of those things come into play with the mortgages. And I feel like we get a dirty rap for no reason because it's everything else that's kind of adding to it.
It's scary when you're buying a house, Becky, and I'm glad you brought that up because it's a segue right into the home warranty and the confusion. Yep. First-time home buyers do have a lot of concerns. Their parents are scared. And, they're scared they're hearing advice from everyone. And, Amy, that's definitely one of the things we're up against. We brought it up to you just at the break. We said, are still home warranties something that the agents are offering or telling their sellers that they should throw this in? And it is.
Oh, it sure is. Yeah. I offer it to every client. Every time I do a listing, I give them, would you like to offer a home warranty? It's a selling point to buyers looking at your home. Maybe the appliances are a little older. That can give people peace of mind. How old is the furnace? Having this warranty really assures people.
You just said that, peace of mind. It gives people peace of mind. People are thinking about a lot of things when they're making the biggest purchase of their life. And if you give them a little bit of peace of mind, then that goes a long way. And in terms of a mortgage payment, the biggest thing for us in this room, and we've preached it forever and ever, is we want people to lie their head down on their pillow at night and not worry that the payment that they're making on their house is too much for them to afford. That is not a good feeling. We don't encourage that. Listen, this isn't a pair of pants when you're 10 years old. You don't buy them a little big to grow into it. Okay,
that's a good analogy.
I like that.
I like that, Harry.
That's a good analogy.
Look, there was a guy a long time ago. They'll grow into their more. You know what? No. Stop with that, please.
Harry,
sometimes it doesn't work out that way.
You wear tough skins. You had the tough skins
with the holes in them. Yeah, when you came from Sears with the elastic waistband. It wasn't cool, but I wore the shirt.
Now you buy it with the holes in them, so it's fine.
Right.
Thanks, Beck. Now Becky says I wear them with the elastic waistband. I appreciate that.
Amy, how about these words that some of the people asked out there? Home buyers were asked to describe the local housing market. These are some of the crazy words that were used. Some of them we can't put on the air in a professional setting for sure. Expensive, bad, overpriced, terrible. Are those really true? Not really.
Not really, no. I mean, we're seeing the pricing is continuing to rise. People are building equity. So when you bought yesterday, you're building equity as opposed to renting. So
I don't think it's an unpredictable market. At least you'll probably jump on. It's really been really easy to understand. It's been appreciation of about, depending upon where you live, 3 to 7%, maybe an upwards to 10%. Get into that house now. Again, if you've got great jobs here in Southeast
the people
Michigan.
who say it's too expensive are the people who didn't do it 4 years ago when we said you should have done this 4 years ago or 5 years ago or 6 years ago, because they were waiting. They're waiting for the big crash. How many times have we said this? They kept saying, oh, I heard the market's going to crash in 20%. It's not happening. It's just not happening. They've put so many things in place to make sure that it doesn't happen again. That's the truth. It doesn't mean that the economy won't ebb and flow. That's normal. Everything is cyclic. I'm not saying it's always going to be appreciating, but we're at an appreciation point right now. And if you had done this a few years ago, you'd be able to cash in on that equity. You know what I mean? And the people who are saying this, I fear is real. It's very scary to take the leap. It's very scary when, like, we were at Home Funded, these people are getting married. It's very scary to start your life and change direction.
Yeah, fear is real. I mean, look what happened on Wednesday to the market, and then look what happened on Friday on the market.
Right.
Everybody's, doing crazy things on Thursday and on Wednesday, and then on Friday everybody's back.
And everyone just needs to take a beat and slow down. But I think all this, that the people who are afraid to jump, or the people who kept saying, I'm waiting, I think, and nothing's wrong with it, but you have to overcome that fear and put yourself in a position. Now, I'm not saying homeownership is the right situation for every single person.
Correct.
I've had a doctor call me one time, and he's like, I have to move in 18 months. I don't know if I should buy. I'm like, if you're moving in 18 months or 12 months, don't buy. That's silly. There are people who renting is definitely makes the most sense for. I'm not saying that it's absolutely necessary, but I think the majority of people want to buy a home. I think the American dream is home ownership. You get to not only establish equity in your property, right? So you can always rely on that in the future. But you're also establishing roots, and building a neighborhood and enriching your family, and all that comes with home ownership. And those are intangibles. I can't tell you how much that is worth to somebody. It's worth a lot to me. Yes.
And it's about, and then you can either react to the market or you can respond to the market. And that's what we're talking about.
We want to respond.
We want to have a well drawn out plan. If renting makes sense for you, then let's rent. Let's be the best renters we can humanly possibly be. However, behind the scenes, we are going to work with you to come up with that time frame and that game plan to get you into a home, because it is situational. Everyone's situation is different, but you can't be dictated by fear like we're talking about, because the truth is that even no matter what you're doing in life, if you wait till you have all the answers, well, guess what? You're going to be sitting by the sidelines doing absolutely nothing, because you're never going to have all the answers, because you should be always growing.
So guys,
you're never going to have enough money in the bank. You're never going to have enough this for kids, for marriage, for all the things. You sometimes, when you just make the decision to move forward, the world has a way of kind of embracing you and being like, I see you now. Yes, and we're going to now move with you.
If you take a look at the population numbers, the ages of first-time home buyers and people buying houses, if you do the math and you realize that population, that age group is continuing to grow, so therefore they're going to need places to live. And this market right now, you could predict that it's going to be like this for 4 to 6 years minimum. So if you think you're waiting, you can't wait it out, because there are more people coming in to that age range that are going to buy houses. So it's increasing. People that have the money, that are coming of age, are going to want to buy homes. So therefore, with a limited inventory, your competition is more. It's a simple math problem, supply and demand, and what happens to home prices when there's lack of a supply and they're in demand.
They go up.
They're certainly not coming down, right? So, Lisa, it's just that way. And so when we say it, we don't say it because, and we tell people, like we said, not to buy houses. All right, we will advise. We advise people like we want to be advised. Like if somebody calls me and says, my daughter, my son-in-law, they're looking to buy a house, and we go over the profile and we think that this is not the right time, what are we going to tell them? No, save a little bit more, okay? We just
8 months, 12 months. Sometimes it's, we got to circle back in a year.
You guys are the best, and I have to recognize Becky and Lisa. This year, Real Estate All-Stars 2025. We've been blessed. We've been blessed to have people on this list every single year. You guys are going to be honored later in the spring for being two of the best in the area. Congratulations.
Thanks.
And it's because we give the right advice.
Yeah.
Okay?
Yeah.
We give the right advice.
There's power in the word no, and sometimes a no, it's not a no. It means really it's just not right now. And like you'll hear like, oh, you guys always say it's a great time to buy. Well, we're talking to the person that is a good time to buy for them. And just because it might not be a good time for you doesn't mean you have to be a negative Nelly and talk down someone that's excited and ready to take that next step in their personal life. These are milestone moments that we get to be a part of for the rest of their lives.
Great point. Actually, I got a call, a referral, and thinking about renting, and sure enough, it's just not right now. Just started a new job, thinking they're getting married this summer. So there's a lot of reasons why they're just not ready right now, but we can prepare you for home ownership. So there's a couple pieces in my conversation.
They're getting married this summer. They should open a home funded account.
That could be something they could do.
I want to throw it to Amy. Amy, you get a listing call. You want to go ahead and list the house. You walk in the house, and the house is just not ready to be listed. What do you do? What's the conversation like?
Well, I like to I ask for a home tour. That's the first thing I do. Will you please tour me through your home? And then I'll make suggestions. These are things that we can do to get top dollar for your home. Because what do sellers want? They want to sell their house for the most amount of money in the shortest amount of time. So that's where I come in, and I can, give them a list. I have resources. We're not going to leave them on their own. I try to look at it like coming alongside my clients. How can I help you to reach your goals? And I have resources to help them do that as well. So,
So sometimes it means, yes.
Like, what about staging? Like, do you offer that? Do you, like, if, just say it's decluttered and you're like, get this stuff out. Like, you're afraid, you're having those hard conversations with people.
Right. Absolutely. Absolutely. Really, decluttering is the number one first step. Declutter and clean it, because fresh and clean never goes out of style. So, and then once we get that done, then we can look at the staging.
Yeah.
Sometimes things need paint. Sometimes things need to be repaired. Sometimes, every scenario is different. And just kind of like we always do is we have to personalize it. So it's not like a cookie cutter answer. Oh, you should put fresh paint throughout. Well, no, maybe your paint was done 3 years ago and it's fine. You know what I mean? But Amy's going to guide them through that step-by-step process to make sure they get the most bang for the buck.
Amy could be one of the nicest people you're ever going to meet. When she sits across from you, how could you not want her to list your house? It's unbelievable, Amy.
Alrighty, guys.
Good for you.
We're up against our second break here. Keep it on 97.1 The Tickets, the Hardcore Mortgage Real Estate Business Show. We take your calls, 248-539-9797. We'll be right back. Welcome back to the Hardcore Mortgage Real Estate Business Show. 8:32 if you're just joining us. A little rainy outside, but warm, and we like warm here. So definitely give us a call, 248-539-9797.
Summertime in Michigan. You know.
It's everyone out here. We're like sweating over here.
Oh, my God. I love Michigan.
Here it is, March 15th. We're talking about 70-degree weather.
Yeah, we love it. Amy Cairns joins us from Realty Executives Hometown. Lots to talk about mortgages, purchasing a home, buying, selling. So we got lots to share with you. Want to hear from you, 248-539-9797. Wouldn't be a great mortgage show if we didn't sort of circle back and talk about down payment assistance. Some great announcements coming up, of course. National Faith Program is still off and running. Lots of cities are involved with it. It's just under $14,000. The grant for most of it's $13,999.
For $14,999.
Yeah,
$14,999. Okay.
Depending on the city.
Now we got the MSHDA program. You guys know all about it. Michigan State Housing Development Authority released some new information. Now it's not coming out till April 1st. Please tell us a little bit about it.
So April 1st, there's going to be a sales price increase. So it's pretty much going to match the national, which is what, $526,000 and change would be the sales price.
Okay.
As of April 1st. So right now, the maximum sales price MSHDA allows is $224,500. So that's a huge deal. It's going to more than double. And sometimes that was people's issue. Like they wanted MSHDA, but the house they wanted was $250,000. Well, you couldn't have used a MSHDA program. And as of April 1st, you will be able to.
It's a really huge announcement.
No,
really
it
big
hasn't
deal.
changed since 2009. It
Yeah.
was so out of touch. It was so out of touch.
And
we
we're
have
one of the last states that adapted it. All the other states have been using the national average. You know what I mean?
but
We're one of the last
people
ones.
out there need to know there are ways to access down payment assistance.
Yes.
So that's the key thing. Everybody says, listen, I can make my payment. I just don't have the down payment money. Well, now there's a way. There has been a way. There always will be a way to get more money for a down payment. And with these price increases, that means you could buy a house up to that amount. You don't have to buy a house for $500,000. You buy a house for $200,000.
There's other caveats because you have to have income. There's income limits.
Yes.
So obviously, if you're making $300,000 a year, you're not going to qualify because there are income limits, and those will get revised in the spring, most likely in May. That's usually when those new numbers come out.
Based on your family size,
Based on
right?
your family size, yep, and location. So everyone's like, what is it? It's not one limit. It depends on the county and how many people in your family, 1 to 2 people or 3 or more. So, and then there's also another caveat, targeted and non-targeted. So certain areas are what they consider targeted. Those have higher income limits. So in Macomb County, we have 2 targeted areas. That's it. It's Harrison Township and Mount Clemens. So if you live in Harrison Township or want to buy in Harrison Township or Mount Clemens, those limits would be higher than anywhere else in Macomb. Oakland has a few, and Wayne County has a ton. So, but these are the programs that are going to help. And MSHDA has a new one that's a first-time homebuyer program, $25,000.
I'm glad you said Mount Clemens because that's one of my. I drove through Mount Clemens a couple weeks ago.
It's a great
and
downtown.
I think it's a great new first-time home buyer city. It's just definitely, it's always been there, obviously,
Yeah.
but now that's opened up. Do you have some buyers in those areas? You're talking about like Macomb. You got Mount Clemens, Roseville. Tell me a little bit of action out there, Amy.
Oh, yeah, absolutely. And I'm so excited about MSHDA opening up because I've had a lot of clients who've been able to take advantage of that. So now we know that the threshold's a little higher.
Yep.
That might help some more buyers out.
It's going to open up the doors. And, at the state of Michigan, they have been really working hard behind the scenes for that legislation
Years,
to
literally
increase
years.
the price point because, again, it's not people want to buy a house. It's always where's the money coming from. And the truth of the matter is they want people that are going to occupy the homes because Michigan is very affordable and they don't want us getting bogged down with these outside investors that are now making everyone forced to rent. We want you to own and occupy. And however we can get you there, we have the means, but it's all about having a conversation. So if you are thinking about throwing your hat in the ring of home ownership, or maybe it's, you made a mistake in the past, you think you don't qualify, reach out to us because you don't know what you don't know, but it's all about that conversation. There's more money out here than in the history of ever as far as down payment assistance programs. And even if you're not a first-time buyer, you still can qualify for some money out here.
I'd love to keep that money in my pocket. I wish they had the programs. They did when I first bought. It wasn't out there. The education of it was just coming through.
It was ignorance, right?
Right.
Yeah.
Well,
and
even now,
Yes.
people say I make too much money for MSHDA, or that doesn't matter. We have a program called Chinoa. There's no income limits. It doesn't matter where you buy. You can buy anywhere, and they'll give you either 3.5% or 5% towards a down payment. That's huge. So there's always an answer.
You've got to talk to the people that know and how to access the funds.
Correct. And we have multiple programs. We have all the other programs that everyone else has. There's Freddie Mac and Fannie Mae that offer down payment assistance for low income and very low income buyers. I mean, there's just so many out there. We have Community One, which is location specific, but most of these can be stacked with each other. It doesn't mean that you have to do one or the other. A lot of them can be used conjointly. with the exception of Mishta. They're a bond loan. Sometimes we can't use bond loans.
Amy, she's really smart about mortgages, isn't she?
She
She
is
knows.
so smart. That's why I love partnering with her. In fact, Lisa and I are going to be offering a first-time home buyer seminar
Oh, great.
April 30th on Wednesday at my office, Realty Executives in Shelby Township. And I just love these type of events because we'll invite anyone who has questions. We'll answer all their questions. We'll take them through the entire process so that they really feel confident.
I love that. And first-time
get in the
home
room.
buyer is unique because a lot of families, when I talked to an agent this week, I said, you know, you could be a first-time home buyer and owned a house before. He's like, what? If you have not owned a house or you're entitled to a house in the last 36 months, 3 years, you are a first-time home buyer again. So it's like you're born again that way. It's
Because
really
a lot has
nice.
changed. It's not like when your parents say, "Oh, I bought a house," and they want to come with you and go on, to the closing or go on all your inspections.
It still happens.
But, yes, it does. But they bought a house 35 years ago
but
and
they
haven't
don't want
been
us
since.
there. They definitely don't want us there.
No,
for
but I mean,
sure.
so much has changed. So much has changed, and there's so many more opportunities in the past few years.
Yeah, and speaking of that, so like I actually was at the Good Company. They had their team awards ceremony last night, so I was there, and having good conversations and like just listening, kind of like just normal conversation. And they said cash is still a big thing where some of their first time buyers are getting beat out by cash. Are you seeing that there's people running around with making cash offers right now?
Yes, there sure
There
are.
is, at least in
yes,
Macomb
there
County.
are. I've had listings. We've had cash offers. I have buyers with cash. Yes, there's people who have a savings out there.
Yeah, what we're getting to is
Or their
that
parents do. Someone does.
yes, yeah,
It's
there's a
them.
lot of gifting going on.
Okay,
Okay,
yeah.
so
Or
there's a lot of
sometimes
gift.
the equity in their home is enough that they sell their house. We have one that we've talked about, and that's what they're doing. They inherited a property, sold it, got cash. So they're selling their own house for more cash. Now they don't need a mortgage, which, hey, I'm super happy for them. Don't get me wrong. But I mean, there's so many other ways to come about it.
But it's about how do you combat that, right? So if you have a first-time buyer, for example, or like that 200 to 400 price point where you're going to see, people are like, where's this money coming from? That is what's going to add to this buyer fatigue that is going to be happening as the rates have settled. People are going to be in, like that springtime, like I'm ready to buy a house when we've been preaching everyone, don't wait to the spring. So that is going to be a huge focal point for some of these buyers that you're going to be seeing there be frustrating, right? So the programs that we were talking about like moments ago are going to help you combat with that cash and then it's also understanding with these, a seasoned agent that sometimes cash isn't king because even if you are paying air quotes, everyone on Facebook cash, that's still a 2-week transaction. That's still taking at least 2 weeks. So if we can kind of run the same path and get a quick close for you, now you're keeping that money in your pocket and you don't have to, bleed out your savings account.
All right. So if we get a closing in 3 weeks, what's a week?
Yeah.
You know what I mean? We can get the seller more money.
And that's happened. We've heard the horror stories
Yeah.
where sellers have sold houses for less money because they thought it was more advantageous to accept a cash offer. So I don't know where that math issue comes in, that if we could close your house, just say 30 days, and you could get $15,000 more for your house, why wouldn't you wait that extra 10 days for that $15,000? I just don't understand it. So when I hear saying, well, somebody's offering to pay cash, it's like, okay, so what? It's not a big.
It sounds cool.
People. It sounds cool, but as Becky said,
I'm going to be devil's advocate why people think that sounds better.
nobody is going to walk in and give you a bag of cash so
Right.
you don't have to report the earnings to the IRS.
Right.
It doesn't happen that way. So stop with that.
I think
I was going to ask Amy if we can combat that and I had this conversation just yesterday. So just taking a larger, let's say a guaranteed on the appraisal or a larger down payment.
Definitely.
Look, after your inspection phase, you've got 4 or 5 days to think about this. Otherwise, this is it. We're moving forward. So you can combat that cash
What about
offer.
occupancy? What about longer occupancy?
Right, looking at the terms. That's what I was going to say. Is
yeah.
you really need to. A good agent's going to ask those terms. We're going to investigate for our buyers. The first thing I do with a buyer, I'm on the phone with the listing agent and I'm saying, what does your client need? And a lot of times, sometimes they need a quick closing date. Sometimes they need occupancy. And we're going to try and give them free occupancy. If the buyer really wants a house, we're going to sweeten the deal by giving them 60 days free occupancy. If they can do that, it's agreeable. And that might put their offer well above the cash offer.
Exactly. And we're bringing the cash anyways at closing,
Exactly.
right? Aren't we? We're wiring the money to the closing.
Right.
So aren't we bringing the cash?
Absolutely. And sometimes it's like people need an appraisal guarantee. They know that the house might not appraise. They already know that based on comps. Good agents do the homework first.
Yes.
And they might know that, hey, we got over asking, but we're probably going to be maybe 5 or 10 shy,
There's definitely a difference between what you're willing to pay and what the house is worth.
Correct.
And you have to have a high level conversation on how that's going to affect your bottom line.
All right, keep it here. We got tons more information for you. 248-539-9797. It's the Hardcore Mortgage Real Estate Business Show. We'll be right back. Alrighty, welcome back to the Hardcore Mortgage Real Estate Business Show 845. We take your calls at 248-539-9797. Tons of great sports coming up here. Mark, Ryan, Pat Caputo, they're going to carry us up to the Detroit Tiger baseball game at 1 o'clock. Pistons later on today. I had baseball all over my mind recently, Harry, but great stuff. I'm actually going to go to an open house today, and there's still a lot of great open houses out there. I say get out there. If you're thinking about home ownership, go into an open house. Go with your agent. If your agent's not available, you can go in, tell the people there that you've got an agent already and all that good stuff. But I'm in Farmington Hills for at 25329 lease stock in Farmington Hills. You can call us at Capital Mortgage Funding at 1-800-LOW-RATE, best mortgage banker, 1-800-LOW-RATE. We'll get you hooked up with all the great agents, all their great open houses.
Are you giving autographs at the open house, Harv?
No, I'm not. I'm just happy to show up here. But I love talking with buyers. We talk about all the great stuff when we go to these, and you've got a couple new listings coming up too. But one of the things is houses have deficiencies. We know that. So it's so important to go there and find out how many of these boxes does it check, because we can usually overcome something. It's just not the best location, but it's got these other advantages. Tell us about those great listings you got, a couple up and coming ones.
Yeah, I'm so excited. So I have a gorgeous ranch. Everyone's looking for a ranch, right? Yeah. So I have a beautiful ranch, North Warren, right near 14 Mile in Hoover. And this one is extra special because it's just fully remodeled. Beautiful, gorgeous kitchen, stainless appliances. All appliances are included. The primary bedroom has an ensuite bathroom, which is a real plus. And let's see, there's 2.5 bathrooms, finished basement. It's a real gem, coming up for $340, beginning of April. Yep.
That's a lot of house for $340.
Yeah, especially a ranch.
Yeah, ranch and with a full basement that's finished.
Full basement, almost 1,800 square foot. Yeah, it's going to be a real nice one. So I'd love to get you some information about that. And then I have something more affordable too coming up in Clinton Township. Under 200. It's a 3-bedroom ranch with a basement, fenced
Another
yard.
ranch. Oh,
this is a huge one.
Yeah. So
what's the price on that one?
If you've got dogs, hey, fenced yard.
Exactly. Yeah. It's a great house. Can pair it with either one of these with the Mishta program, right?
Mm-hmm.
For under 200,000, great. Harry says he only likes dogs and ice cream. Though, if you got there, you definitely say dogs.
Yeah, our off-air conversations are always cool. Okay, I have a question.
Yes.
So I get a lot of calls where we have these FHA buyers, and some on the financing terms that the listing agent, for example, will list will be like not FHA. Mm-hmm. And a lot of that, we found is that, when the agent's willing to have that high level conversation across the table. So we're talking about the buyer's agent, the agent representing the buyer reaches out to the listing agent and they'll say, hey, why are you not offering FHA financing? And a lot of times it's like these minuscule things that we're able to really work out, and we're still able to get a strong FHA buyer in some of these homes. So I know you're high level and you're looking at those things. And the reason why someone, just to kind of backstory it real quick, FHA comes with health and safety concerns. So if you have a basement, we want to make sure there's a handrail, that kind of stuff. So when you are doing your listings, are you looking at that scope and being like, okay, is there a lot of damage to this house? Is there a lot of health and safety when you're putting that on the ticket as far as what financing you're assuming will be accepted?
100%. Yeah. So I, get out my magnifying glass. I'm looking for any kind of peeling paint because I know that's on the list. And those are easy to overcome. Yeah. A lot of it is easy to overcome. Sometimes we're putting a little handrail in. Like I had one recently where there was 3 stops from the garage, the attached garage into the house. We just put a wood hand railing up. It was, an hour project.
$50 to $100, not
even. Not even.
And the reason why I bring that up, it's not it's going to open up that market to a lot more offers for your sellers. So when you're having those hard conversations up front, that they might be a little bit frustrated, like, oh my God, Amy, a handrail, are you serious? Right? They get frustrated a little bit maybe. But that is opening up the door for more offers.
Right. And that's exactly what we explain to them. You want to sell your house for the most amount of money in the shortest amount of time. We want to open it up to as many buyers as possible.
And don't you want to address those health and safety issues for your buyer, for the seller to go ahead and accomplish that for the buyer? Because when a buyer walks through the house, you want to make sure that they're protected too. You're putting your best foot forward to make sure that house is in the best possible shape. Health and safety is really number one when it comes to selling FHA.
Yeah. And just to clear up misconceptions, I know you used FHA as an example, but things like peeling paint, that's also a conventional concern. Everyone has this idea that FHA is the only one or VA is the only one that cares about peeling paint. That is not the case. Peeling paint, especially before 1978, could have lead in it. It does not matter if you're conventional, FHA, VA, USDA, they all would have to be addressed and corrected.
I'm glad you brought it up, Fannie
It has
Mae.
nothing to do with FHA.
Right, because Fannie Mae and Freddie Mac reached
Correct.
out to the Appraisals Association and said, look, guys, you're on the hook for this. It's your
Correct.
job to point out these deficiencies in the house.
And that happened years ago. So there's this like old school mentality that FHA and VA are the ones that have all these conditions. And that is 100% not the case. If you have a trip hazard on the sidewalk, it doesn't matter if it's FHA, VA. Conventional is going to call it out too. You got a 4-inch lift. Everything that's going to be an issue will have to be corrected. It does not
You
matter.
know what it says when we walk up to a house too, Amy, and you know this. You walk up to a house, it says whether or not this house had tender loving care or it was just not up to date, well-kept house. And again, the front porch is the beginning of it. And then you look around and you can see what's going on the soffits and, what has been painted. If there's peeling paint everywhere, you feel like there's a lot of deficiencies. And it's a cheap fix, a less expensive thing to really present your house in the best possible manner.
Right, because there's nothing worse than walking up to a house with your buyer and the front door is all dirty, fingerprints, maybe dog slobber all over. You already have an unfavorable opinion.
Because
So
you think they're not taking care of it.
yes, yep.
All right.
Yeah, so I wanted to piggyback on that. So I was bringing that up because actually I got an offer accepted that originally the listing agent or the seller, they weren't accepting FHA terms. And in this case, we made a phone call. It was minor things. The buyer and the seller agreed who was going to be responsible for any repairs that were cited by the appraiser. Because again, like Lisa alluded to, the appraiser is going to call some certain things out, and the lender, that's what we go off of. But now we're under contract, and originally they wasn't even listed as FHA as one of the financing terms. So the point that I'm making is just because it's not listed on that MLS, don't sell yourself short, because it could be as simple as your buyer agent really representing you. And that's why we always preach it matters who you work with, because they can reach across the table, have a handshake and a pancake over, whatever you got to do. And you now have a buyer that is going to now be one step closer to owning something versus renting.
I can basically say we've never not closed one that we said, look, this can go FHA, and we made it work.
Yeah.
We've never not made that work. Hey, guys, let's get into debt consolidation real quick. Of course, the mortgage industry is always looking for ways to help people save money, and debt consolidation is the number one thing. I think a lot of first-time homebuyers don't recognize the fact that as this equity builds, you can use that equity to maybe pay off something that got you there to begin with. Maybe you took, lost all your savings because you put in the new bathroom, but there's ways to pull that equity back out and put the money back to help you guys out. Debt consolidation, if you guys want to jump in real quick.
If you're sitting there and you've got your 4% rate, but you got 22 to 25% on your credit cards, how does that make sense? All right, it doesn't make sense. You're going to hold on to what you think is a great interest rate, but then every single month you're shelling out mega bucks on a 22 to 25% credit card. It doesn't make sense. You have to do the math problem. It's all about how much money you could save on a monthly basis. So if you think you're saving on one hand, but you're reaching in your pocket and you're shelling out 2, 3, 4 times the amount that you really should be paying. Now think about it. 24% on a 7% mortgage rate. Okay, you're paying almost 3.5 times more. So you have to do the math. You have to sit down every month and think about how much money am I shelling out? How much can I save by doing it? There's only one pile of money coming in, right? And that means there's a pile of money going out. We're trying to hold that money for you and keep that money in your pocket. So don't be enamored with the rate. Be enamored with how much you're shelling out.
Yeah. Absolutely. And the truth is that when it's like a stock market, you can have $100,000 in your stock portfolio, but until you pull that out, it's unrealized gain. Same with the equity in your home, right? You can have $50,000 of equity, but you only can tap into 80%, but you have to own the house first to get into that. And the reality is that you can help reset the baseline for yourself and use that to get yourself in a better cash flow position. And we do it every day. I'm saving someone $1,000 a month, because the reality is that they bought a house in 2020. The taxes reassessed. They've been living off their credit cards. They were not, what was it? What was the word? When everyone had to work, when you could work, whatever the word was, where your necessity or whatever it was.
Back in, yes.
Yeah, during COVID. So they dwindled their savings during that time when they were not working. Okay.
Yeah.
And now they're back working, and we have to reset that for them. And then the fact that the interest rates have went up, and when the Fed is announcing whether they're cutting their rates or not, it is not mortgage rates that they're announcing. It is the credit cards, the short-term lending. And one other thing I've noticed, that dirty little thing that we see when we're analyzing someone's financial picture, personal loans. There's a lot of people that are taking out personal loans, and these interest rates are like 30%. They're higher than credit cards, where they're taking out $2,500 and they're really paying like $5,000 over the next 6, 7, 8 months, it doesn't make sense.
Yeah,
So
let's go
before
over an
you do
example
stuff
here.
like that,
If you're on a fixed income, let's just say you have some annuity income in, you have Social Security coming in, and
Maybe
it's
a
a nice
pension.
fixed income, right? And a pension. Let's say you have all that coming in. It's fixed every single month, so you know what you're getting. But you ran up your credit cards for whatever reason. You went out and bought your grandkids gifts, whatever it is, and you have $28,000 credit cards, okay? You know you're not going to use them anymore. You've got to take a look at paying that debt off because you only have X amount coming in. And if we could save you $300, $400, $500 a month, all right, think about it. That's $6,000, $7,000 a year. You're just going to be free and clear of that debt. And the good news is that mortgage interest is still one of the only deductions you have left.
And everyone, we're talking a lot about like a cash out refi where we're touching your first, but there's other options. We can do a HELOC. So maybe your rate on your first is like in a 2 and you really don't want to touch it. You have 2 1/4. You're one of those super lucky people, but you need money to consolidate other debt. We can do a home equity line of credit or a second home equity loan. That's different, a home equity loan, and pay off all of that credit card with one second mortgage. It will still save you money and that rate will still be lower than anything you're paying on credit cards. There's many options. It's all about cash flow. And everyone has this idea that I don't want to refi because I don't want to start over. You don't have to. If you've been in your house for 5 years, then we just refinance you into a 25-year mortgage. You're not losing any time that you've already paid into it. There's ways to structure this to make sense for everybody, whatever your situation is. But you have to call us.
the word was essential. Essential working.
Essential.
Everybody. The word was essential.
I couldn't come up with
I-
something.
no, no,
I said
no.
necessity.
I didn't know where she was going. That was killing her.
It was the
killing her.
word was essential.
Why?
Okay, well, if you are not an essential worker, and to Lisa's point, yes. So, like, I actually have a longtime client of mine. I put them
Essential
in,
worker,
Yes.
yes, she was.
So I have a longtime client of mine. I put them in a very strong interest rate on a lake home, right? And it was a 2.875. We're not going to forego that rate, but we are doing a home equity line, so that way they can completely revamp their lake home property, so they have legacy for their family and the generations to come. So
Perfect.
get with a high level lender, have high level conversations, and we will find the perfect scenario for you if it exists.
Amy, Cairns, thanks for joining us. As you know, Amy, we're pro buying houses. 40% of the homeowners are wealthier than the renters. Hey, you've got to buy a house if you want a piece of this equity. I see Pat Caputo. He's on the on-deck circle swinging the heavy lumber out there, that's for sure. Keep it here on 97.1 The Ticket. We'll see you next Saturday.